Welcome back to the deep dive. Today, well, we're diving into a giant, Amazon, a company that completely changed how we shop and then, kind of changed the internet itself.
Absolutely.
We're digging into the sources you sent us, really trying to answer one big question. What's the magic mix, the businesses and market forces, pushing Amazon towards that very exclusive $3 trillion market cap club?
It's a fascinating question.
Yeah, and the sources we have argue Amazon's built this unique sort of competitive shield. They call it the rare triple threat. Three powerful, interconnected businesses.
Synergistic is the word they use.
Right, synergistic.
Yeah.
And the idea is that the current, explosion in AI is acting like rocket fuel for all three at the same time.
The catalyst, yeah.
So our mission today is to unpack that structure, look at the financial mechanics behind it, and try to figure out just how soon we might see Amazon sitting alongside NVIDIA, Microsoft, and Apple.
Big names.
Huge. Okay, so let's unpack this. Maybe starting with just how much the playing field has changed. You need to understand the sheer scale shift for these top public companies.
That's really critical context. It's a massive paradigm shift. If you just wind the clock back to, say, 2005.
Not that long ago, really.
Exactly. The two biggest public companies in the U.S. were ExxonMobil and General Electric. Huge industrial energy firms. Valued back then at around $392 billion and $375 billion. Big numbers, but...
But pocket change compared to now?
Relatively speaking, yes. Fast forward to today, and the list is just completely dominated by tech, and specifically tech companies powering or, enabling AI.
And the valuations are just mind-boggling, frankly. The top four, at least when this material was written, really show it. NVIDIA leading the chart at $4.5 trillion.
Incredible number.
Then you've got Microsoft at $3.9 trillion, Apple $3.8 trillion, and Alphabet, Google's parent, already over that $3 trillion line.
So the 3 trillion club already has members?
It does, and that's what makes Amazon the obvious next contender, right? They're sitting at nearly, $2.4 trillion currently?
Around there, yeah. And our sources are definitely bullish. They argued, look, with this unique setup, these growth drivers, plus Amazon's track record.
They tend to deliver.
They do. Strong execution historically. So hitting $3 trillion seems more like a when, not an if, according to them.
Okay, but let's get back to that core idea, the rare triple threat, because most companies, they'd be thrilled to have just one dominant business. Amazon supposedly has three.
Right. And what's fascinating here, I think, is how interdependent they are. Especially when you look at the money flow.
Oh, okay.
You look under the hood and you basically see one incredibly profitable engine that's funding the growth and scale of the other two.
Yeah.
It's like this closed-loop system generating massive amounts of capital. Very unusual at this scale.
So the engine room, that's got to be Amazon Web Services, AWS.
Absolutely. AWS. It's the cloud infrastructure behemoth. They didn't just jump into the cloud. They practically invented the modern cloud infrastructure market back in, 2002?
They built the blueprint, yeah.
They really did. And everyone else followed.
And even now, Microsoft, Google, they've thrown billions at catching up, but AWS still seems to have a solid lead.
It does. Estimates hover around 30% market share for AWS.
Yeah.
Then you've got Microsoft Azure maybe at 20%, Google Cloud around 13%. So, yeah, still a dominant position.
Why is that, though? Why do they keep that edge, that moat?
Well, it's often boiled down to a couple things. First, just the sheer breadth of services. They have an enormous catalog. More tools, more options, more niche stuff than competitors. Yeah, it makes it really sticky for developers once they're in the ecosystem.
Right. Harder to leave.
Exactly. And second, their global footprint. The number of data center regions, availability zones, it's massive. If you're a big global company, that reliability and reach is critical.
And that dominance shows up in the financials, obviously. The sources pointed out data from the first half of 2025. AWS was only, 19% of total revenue?
Yeah, less than a fifth of the top line.
But a staggering 58% of the operating income.
Precisely. That's the key. It generates enormous cash flow. And that cash allows Amazon to do all sorts of things, take risks, build out logistics like crazy, even subsidize prices in their retail wars sometimes.
It's the company ATM.
Basically, yeah.
Yeah.
The ATM funding the whole operation. And it's still growing nicely. Growth was up a respectable 17% year over year in Q2. Still strong.
Okay, but let me push back on this triple threat thing for a second. If one segment, AWS, is generating almost 60% of the profit, doesn't that make the other two look less like threats and more like strategically important but very expensive operations. Is it truly a triple threat, or is it just AWS carrying the team?
That's a really fair question. And honestly, that tension is kind of what defines Amazon's whole story and its valuation.
Yeah.
You're right. The other two aren't as profitable on their own, not in the same league as AWS. But their role isn't just profit. It's scale and data. That's the synergy. The moment AWS generates that profit, Amazon plows it right back into pillar number two, the e-commerce business, the original flagship.
The everything store started way back in '94, made them the world's biggest online retailer. And overall, only Walmart is bigger globally, right?
That's right. Second largest retailer overall. And the scale is just immense. Q2 results showed net sales hitting $167.7 billion. That's up 13% year over year.
Still double-digit growth on that massive base.
Yeah, and what I find really interesting is that 61% of that huge number came specifically from their own digital retail sales or the fees they charge third-party sellers on the platform.
So the marketplace is a huge chunk of it.
A very big chunk. And all that volume, well, it powered a net income of $18.2 billion in Q2, up 35% from the year before. So you have this mature, massive global operation that's still growing robustly.
Okay, so AWS provides the cash, e-commerce provides the scale, and crucially, the customer interaction, the data, which leads nicely into pillar three. Here's where it gets really interesting, maybe. The advertising business. It seems to be rapidly changing their internal money mix.
It absolutely is. Think about it. Because Amazon controls so much retail traffic, people actively searching with intent to buy.
High-intent searches.
Exactly. Gold dust for advertisers.
Mhm.
They've built an incredibly powerful advertising platform right on top of that retail foundation. They know what people are looking for, what they buy.
It's not just search ads anymore, though, is it?
Oh, no. It's search. Definitely. Product searches are key. But it's also ads within Prime Video, ads around their live sports content, ads on Fire TV devices, even integrating with their gaming platform, Twitch. They're hitting you at multiple points.
Capturing eyeballs everywhere.
Pretty much,
Yeah.
from browsing entertainment to actually clicking buy. And that power has pushed them up the ranks really fast. They're now number 3 in digital advertising, behind only Google and Meta.
But growing faster than them, maybe?
Well, the growth rate is definitely impressive. Q2 ad revenue was $15.7 billion. Now, okay, that's still only about 9% of their total revenue.
Still relatively small compared to e-commerce or even AWS revenue.
Right. But the growth was 23% year over year. That's huge. That's the kind of growth you usually see from much smaller, focused ad tech companies. But Amazon's doing it backed by that ocean of first-party retail data.
Okay, so we've got AWS, the profit engine,
Yeah.
e-commerce, the scale and data engine, advertising, the high growth engine. But you said earlier, this triple threat story really clicks when you add in AI.
Precisely. AI is like the connective tissue, the turbocharger linking all three and boosting their value. And this is where AWS, the cloud giant, gets another massive tailwind. Amazon is positioning itself right at the forefront of generative AI.
Building the tools, right. The sources said something like over 1,000 generative AI services and apps either being developed or already out there for cloud customers.
Yeah, specifically within AWS, they're building the infrastructure and the applications layer.
And the synergy is obvious, I guess.
It really is. Think about it. AWS provides the raw compute power the servers needed to train and run these huge AI models. That's foundational. But maybe even more importantly, the e-commerce side provides the unique proprietary data.
From the everything store.
Exactly. That data makes their AI models incredibly valuable for retail optimization, for making advertising hyper-targeted. It's data nobody else has at that scale and specificity.
So retail data makes the ads and recommendations better, and the cloud services let other companies build their AI applications on top.
That's the loop. AI makes the ad platform way more effective. It makes e-commerce smarter think, personalization, supply chain, logistics. And all that activity, all those companies wanting to build AI, drive massive new spending right back into AWS, especially for services like Bedrock, their managed AI platform.
It feeds itself.
It really does. And the CEO, Andy Jassy, he was very direct about it, quoted as saying, AI will be a substantial catalyst. It's not a side bet. It's central to their next growth phase.
Okay, so let's connect all this back. The triple threat, the AI boost.
Sure.
What does it mean for actually hitting that $3 trillion number? What's the math look like?
Right. The bottom line, so starting from where they are, around $2.35 trillion, they need about a 27% climb in the stock price to hit $3 trillion.
Okay.
Now, to figure out how quickly that's feasible, the sources we looked at focused on the price-to-sales ratio, the PS ratio.
Ah, interesting. Why PS and not, say, price to earnings, which you hear about more often?
It's a good question. For a company like Amazon, which has historically prioritized growth, market share, and massive reinvestment over maximizing short-term profit.
Right, they famously ran on thin margins for years.
Exactly. So the market often values them based on scale and revenue generation. The PS ratio basically measures how much the market values each dollar of Amazon sales. It reflects growth expectations and revenue efficiency.
Got it. So what does that PS ratio tell us?
Well, based on their current forward PS ratio, which is around 3, the calculation suggests Amazon would need to generate approximately $902 billion in annual revenue to support a $3 trillion market cap.
Wow, $902 billion. That's a lot of revenue.
It's a massive number. And just for context, Wall Street analysts are currently forecasting around $708 billion in revenue for 2025.
Okay, so there's roughly a $200 billion gap there that needs closing.
Needs closing through accelerated growth, powered by that triple threat plus AI, essentially.
So the timeline, what are the predictions?
Well, the Wall Street consensus seems to be forecasting growth around 10% annually for the next 5 years or so, if that holds steady.
Simple math puts them there around.
Around 2028 seems plausible under that scenario.
Okay.
But interestingly, the specific sources we're drawing from are actually a bit more aggressive. They think Amazon might get there sooner than the 2028 consensus.
Why? What's their reasoning?
They point back to Amazon's history of strong execution, basically arguing that 10% annual growth might be too conservative, especially with the generative AI boom really kicking in for AWS enterprise customers. If AI accelerates that revenue growth just a few extra percentage points per year,
That 2028 timeline could pull forward quite a bit.
could pull in dramatically, yeah. Maybe 2027, even late 2026 if things really take off.
Okay, if we link this to the bigger picture,
Hmm.
this compelling growth story, it does bring up valuation, doesn't it? Why does the stock trade at such a premium compared to the average?
It definitely trades at a premium, and you need a strong reason for that. Right now, Amazon's trading around 34 times earnings. The S&P 500 average multiple is closer to 31, so noticeably higher.
And the justification for that premium, is it just the future growth story?
It's partly the future, but it's arguably also heavily justified by the past. Just look at the track record. Over the last decade, Amazon's stock price is up.
Yeah.
Wait for it, 712%.
700%, wow.
Yeah. Compare that to the S&P 500 index over the same period, it gained 239%. Still good, but not even close.
Not even in the same ballpark. So the market is essentially saying, we believe Amazon will continue to massively outperform the broader economy, just like it has done, that past performance builds trust and justifies paying more now for future earnings, supporting that $3 trillion forecast.
So the pieces seem to be in place. Massive logistics, booming ad business, dominant cloud platform, all juiced by AI. It makes a strong case for hitting that next big milestone.
It's a very compelling narrative. But, going back to your earlier challenge, the foundation of it all, that profitability, really rests heavily on one pillar. AWS, providing, as we said, 58% of the operating income. It's the market leader, yes. But the provocative thought I'd like to leave you, the listener, with is this. What happens to that premium valuation, to that $3 trillion timeline, if, and it's an if, but a possible one, Microsoft Azure or Google Cloud actually start to significantly close that market share gap in the next couple of years?
If they chip away 5-6 points a share. Exactly. What does that do to the perception of AWS's dominance and, by extension, to Amazon's overall profit engine and stock price? That dependency, that's the key risk to watch. Something for you to think about next time you're looking at the cloud market numbers.